Okay, so get this. Starting in January 2026, the Fed intends to buy back $45 billion a month. And yes, I said billion with a B, a month in debt every single month starting in the month of January 2026. And this is the biggest buyback they've ever done. So what does this actually mean for you and your wallet, or if you're planning on buying property here in Orange Beach, Gulf Shores, one of the surrounding areas? Well, today in this video, I'm going to cover all that. I'm going to tell you the entire skinny to it. I've done all the research so you don't have to. And we're going to cover all that in this video today. No BS, no extra jargon to go with it, nothing you can't understand. We're going to get to it right now, so let's get to it. Hey guys, if it's your first time to the channel, don't forget to hit that like button, subscribe button, and ring that little bell so you can be one of the first ones to learn everything there is to know about what it's like to actually live in Orange Beach, to move here, vacation here, party here, work here, play here, all the nuts and bolts. My name is Andy Hollis, along with my partner Aileen Fountain and our entire team. We do videos just like this every single week just to be informative, just to let you know what it's like to actually live here at the beach. So whether it's 9 days, 90 days, or 9 months until you're thinking about making that move, don't hesitate to pick up that phone, give us a ring, shoot us a text, send us an email, set up a Zoom call, send up a smoke signal. We don't care. Just get in touch with us any way you can. We would love to help you make a smooth move to our little slice of paradise. We get phone calls, texts, and emails from people just like you every single day, and we absolutely love it. So as I mentioned, today we're going to talk about the Fed buyback. You've probably seen articles on it. I have done a little research, dug up the articles myself. We're going to go over some of those today, and we're going to do a little math and show you what it actually would mean to you if you're planning on buying a property. But I guess first things first, what is a Fed buyback? I mean, what does it even mean? So what that means is the Fed will actually buy back debt, things like treasury bonds, mortgage-backed loans, securities, things of that nature. And what they're doing is they're basically putting money back into the financial system, which is kind of quite the opposite of what they've been doing for the last couple of years. So instead of tightening the screws, they're actually just loosening everything up. So why would they do that? That's a really good question, because they feel like something may be slowing down in the economy, or they just want to grease the wheels and try to keep the machine going so that nothing in the back end actually breaks. So let's take a deep dive and maybe take a look at this a little further. So here's an article. This is the Reuters headline. It says, Fed says it will start reserve management treasury bill buying in the month of January. This isn't some rumor. This is actual reporting. So why does this actually matter? See, what happens is when the feds buy back the bonds, it pushes yields down and mortgage rates follow yields. So hopefully what we're seeing is the foundation of why we could see mortgage rates starting to soften soon. What this means is lower interest rates, lower mortgage rates, and lower payments, of course. So you might be asking, well, why is $45 billion a month? Why is that the number, and why is that important? Well, Bank of America put out an article that says the feds will buy back about $45 billion a month. Is huge because it actually puts a number behind the trend. $45 billion is historically very, very, very large. It's similar to QE moves they've done in the past, which is quantitative easing, and it's not just talk. Analysts are forecasting actual purchases to start happening in January. And the reason for this is because reserve levels are tightening within the banking system. And listen, if you don't know what QE moves are, don't worry about it. I didn't know it either. I had to look it up. So let's take a look at what it actually means. Here's a quick breakdown of it. So basically what happens is the feds create money digitally. They buy back bonds from banks and lending institutions. The bond prices go up, yields go down, and mortgage rates follow yields downward. Borrowing becomes cheaper, and that means more buyers and investors come back into the market. And if that holds true, even just a little bit, then mortgage-backed securities become easier to move and yields go down, which in turn mortgage rates follow. So let's do some math real quick. Let's say rates drop even 1%. That could mean thousands of dollars per year in savings on your typical mortgage. So let's just take a look at a typical mortgage, which is $500,000. At 6.5%, you're looking at a $3,160 payment. You drop that rate by 1% to 5.5%, and you're looking at a new payment of $2,840. That's a monthly savings of $320, which equates to $3,840 a year in savings. Now, just imagine how great that would be to have all that money back in your wallet. Or better yet, imagine how much more house you could buy with that much more leverage. It could mean the difference between you buying a 3-bedroom and a 4-bedroom house for the same payment. So what does this mean for us locally here in Baldwin County? Well, across Baldwin County, we've already seen things like more inventory than the last couple of years, longer days on market, more motivated seller, and a little more negotiating room for buyers. Now add a lower mortgage rate into that mix, and that's when you're going to start seeing buyers waking back up. Out-of-state folks coming in to snag up these condos. Cash flow improving on short-term rental, and sellers starting to think, okay, well, maybe it's now is a good time for me to sell. So if you've been waiting for that perfect time to buy here in Orange Beach or Gulf Shores, this Fed announcement could be the first real sign that things are moving in the right direction. Now, let me speak to the investors out there real quick. So I probably don't even have to tell you, you know what lower rates mean. It means cheaper financing, better cap rates, higher cash flows, and higher booking demand on these rentals once the market opens back up and travel ramps back up. We already know that the Alabama Gulf Coast is a sleeper market. Family travel, year-round demand, and rental-friendly zoning, plus buyers from all over the United States and the world for that matter, love it down here. So if mortgage rates ease up just a little bit, then this place heats up drastically. Let's say you're running numbers on a condo in Gulf Shores. Dropping your rate from 6.5% to 5.5% instantly improves your debt service coverage. That can change your investment from maybe to definite yes. New construction will be even better. Why? Because new construction buyers often feel the rate change first before anyone else in the market does. Because new construction builders base their pricing on expected demand. If rates look friendlier, builders get a little more generous with their pricing, and they start to put out aggressive incentives. You know, things like credit towards closing costs, upgrades, or buy-down rates. They do this so that they can keep traffic moving. You see, they can't start building new projects until they have all of the previous project already sold. So why is the Fed doing this right now? Well, it's definitely not just because they woke up feeling generous. That didn't happen. Big moves like this usually mean one of two or three things. The growth is slow in the economy. Markets are too tight, which I think is the case in this instance. Or they're trying to prevent something from behind the scenes actually breaking, so they grease the wheels to keep the train moving. This isn't a panic move on their part, but it's definitely a good signal. And plus, hey, the real estate market is always the first place to feel the impact. So what should you do right now? So here's some advice from someone who lives and breathes the real estate market on the Alabama Gulf Coast. If you are a buyer, start watching rates weekly. Go ahead and get pre-approved by a local lender now, not later. And that way you're ready to jump on something whenever the perfect place hits the market. If you're a seller, of course, lower rates equals more buyers equals better offers. It just might be the most favorable time for you to list that we've had in the past 2 years. If you're an investor, start running your numbers with a slightly lower interest rate, because when you do this, the cash flow picture gets a whole lot prettier. And listen, when the real estate market starts booming, the rest of the stuff starts booming. That's a fact. So that is just about going to do it for our breakdown of the Fed buyback that starts in January. And listen, remember, it's $45 billion a month that they're going to start buying back these bonds, and they are going to start in January 2026. So we should see the impact pretty soon. And this could be just the beginning of a much friendlier real estate market and start softening these mortgage rates, and things will start to move, especially right here along the Gulf Coast. And just remember, if you're thinking about buying or selling or anything right here on the Gulf Coast in Baldwin County, just reach out to us. We would love to help you. no matter the situation. We're just here to give you good advice. We love helping people trying to figure out what they need to be doing, and we're experts in the field. There'll be no pressure. It's just good, honest advice. And remember, if you want to learn everything there is to learn about what it's like to live here, vacation here, work here, play here, all the things as far as beach life goes, be sure to hit that like button, subscribe button, and ring that little bell so you could be one of the first ones to learn everything about the beach life. Be sure and check out some of our other videos, and until next time, we hope to see you around town.
I get flip-flops and your shades that hit the sand. Where the Gulf breeze blows, it's a wonderland. Orange Beach living, oh it feels so right. From sunrise